Stop what you're doing. For months, gold and silver were unstoppable. Gold soared by 65%, while silver climbed an incredible 78% this year, hitting a brand new all-time high. It seemed like nothing could touch the precious metals market, with gold breaking historical records, exceeding over $4,200 an ounce, even touching an astounding $43.81. But then the floor fell out. In the last few days, we've witnessed the biggest precious metals rout in over a decade. Gold and silver have just seen their worst one-day drop in years. Gold plunged by more than 6% in a single day, losing also its $4,000 support level that it sliced right through. So the question we have to ask is, why were prices as high as they were to begin with? As you know, we've had tremendous inflation concerns, and those continue. Additionally, central banks have been buying and continue to buy. And also, we have this geopolitical uncertainty that goes up and down depending on what's happening in the world. Now, that perfect storm for reversal has also been initiated because the prices have gone so high that it just makes sense that we're going to see massive profit taking, and that's exactly what we've seen. What's also been really interesting is that a lot of that profit taking has been in the paper market through the ETFs and things like that in the futures market, not so much in the gold and silver physical market, which we deal in primarily here at Summit Metals. We've also seen, uncharacteristically, the dollar has actually strengthened over the last 30 days, and that's unique. When precious metals typically go up in value, it means that the value of the dollar is going down. That has not been the case in the last 30 days. We also saw where Besant came in and said that China was ready to make a deal. These are the kind of things that cause the precious metals markets to blip, because people have been playing against things like tariffs, things like problems with China and other occurrences around the world. When those things tend to look a bit more settled, that's when you see gold take a bit of a hit. Now, when we talk about a correction, it's important to understand that the experts are very divided on what's going to happen going forward. And that's really what we care about right now. Many suggest that the long-term trend remains very solid. I happen to be in that camp, and I view this as an incredible buying opportunity for those of you who also believe that what's happening in the world, the big macro environmental things that are taking place, are going to lead gold and silver not just up, but significantly up from where we are right now. But the short-term focus we have to stay zeroed in on. The fact that we did go down below that $4,000 threshold, the fact that we know the Federal Reserve is getting ready just this Wednesday to drop rates, we presume, and we also have remaining our geopolitical considerations. All right, let's now go to the charts and take a look at what's happening. All right, so if we look at gold right now in real time, we're filming this at around noon, around 12:20 on Monday morning, Mountain Time. We see gold has gone below, but now back up above the $4,000 mark. We also noticed that the futures contract has actually now at 4,021. It's clearly now in a state of contango, so we're starting to see a more normalized market there. If we now take a look at silver, what we'll notice, we saw this big drop this morning. Silver down even right now over 3.6% at 46.86. And we see that it is now, for the first time in a very long time, not in backwardation. It's actually in contango. So that's a big change. If we go out into the March futures contract, it's clearly in a state of contango. So that silver squeeze we were seeing is starting to go away, and those are the kind of things that are affecting the market. You'll notice both on the silver and the gold chart that I showed, we've actually gone below our 20-day simple moving average, but we remain well above our 50-day in both cases and dramatically above the 200-day. Now, when we talk about the money supply, we can see that the Fed is continuing to print money. These are, again, very positive things for the gold and silver market long term, not over the next day or two or three, but long term. We also notice that the Federal Reserve, the effective funds rate, is continuing to drop. We know Wednesday we're going to have a rate decision. We all think it's going to go down. That, again, is positive for gold and silver. We know that the percent at which people believe that rate cut is going to take place is now around 98%, a virtual assurity. We also notice, too, that unemployment is continuing to go up. That's also very strong because it means that the Federal Reserve is going to feel inclined to drop rates in an effort to create jobs, to make it easier for businesses to borrow money so that they can create more opportunity. And that is also, contrarily, highly inflationary, which is, again, good for gold and good for silver. Then also we notice that our federal debt is continuing to go up. That hasn't changed. When we come here to the U.S. debt clock, our national debt has exceeded $38 trillion and continuing to spike. If we look down here, something we reviewed last week, we noticed that our paper to silver ratio is 359.2 to 1, remaining, and gold at 139.49. That means for every paper contract, it's only backed by one of an actual physical product, like a physical ounce of gold or a physical ounce of silver. That means there's still tremendous leverage in the market. Okay, let's talk now about the forecast. I know everybody's very interested after seeing the markets get hit like they did. What can we expect going forward? So let's talk about that right now. In the immediate short-term period, the models I follow show that we're going to continue to see contraction through the end of this month, even through the first few days of the next month. So these next few days create tremendous buying opportunities if you believe, like I do, that we're about to see the metals turn around and start heading back up. The long-term structural elements that are in place over the next 90 days, over the next 6 months or so, remain very, very positive. So I think we're going to see stabilization. We're going to see a sharp reversal in risk sentiment. The critical technical levels for gold that have failed are going to start to solidify again, and we're going to see the market start to climb. And we know the market is watching for just that. So this next 5-6 days are going to be very critical in what takes place. All right, so here's a couple of things to think about with gold. We have a resistance. When gold starts going up, there's going to be some resistance around that 4,000 mark, but then really around the 4,180 to 4,200 mark. That's something to pay attention to. But this support level of 4,000 remains really important. When it went below that today, a lot of people thought it was going to go a lot lower. And as I'm sitting here right now, that did not happen. It went down and then it shot back up above 4,000. We'll see what the next few days hold. I would not be surprised to see it go back down below 4, but I don't expect that to happen for more than a week or so. So trying to time the exact point, the exact second when it's going to be at its lowest before you make your purchase, to me is kind of a fool's game. You're dealing in small increments now. It's more about getting on the right side of the trade, and now is the time to do that, in my opinion. All right, so 2 key points to focus on for this week as we've discussed. One, the Federal Reserve. What they do on Wednesday is super important, and that is going to move the market, so watch for it. Also, what is it going to do to the dollar? Usually when the Federal Reserve drops rates, it has a negative impact on the value of the dollar. We should expect the dollar to go down. Both of those, the Fed dropping rates, the dollar going down, those are 2 drivers that are highly beneficial for both gold and silver. All right, now, we know that silver just took a huge hit, down 9% in a single session. That's crazy. But where can it go? Right now, around 46.5. My charts and everything show support sitting somewhere around that $43 level. Can it get down there? Absolutely. I don't think it's that likely, but we have to be prepared for that. Additionally, we know there's this $50 price that's super important. that is a psychological price at which people are going to be focused. Will it get to 50? Will it stay at 50? Will it increase beyond 50? That's what we'll be paying attention to in great detail over the coming week. All right, let's move now to a 90-day outlook, more of a 6-month outlook. What do we think is going to be happening going forward? Now, despite heavy selling that we've seen over the last week with all the profit taking in the paper markets and things like that, we're starting to see that back off now. And I think we're going to see a slight turn. And believe me, that's just as fast as it went down, it can go up just as fast as well. I think that drop was necessary. It was long overdue. It ultimately is very strong for the market going forward. And many experts, all the analysts out there, none have changed their beliefs and where the market's going to go, their forecasts, whether it's UBS or B of A or Morgan Stanley or Goldman Sachs. They're all still and remain in their projections that gold and silver are going to increase over the next 6 months, year, 2 years, and going forward. All right, let's get to the gold forecast now, because I know this is what everybody really wants to focus on. This is the 6-month outlook that my proprietary tools are showing. When I cut this, gold was right around that 4,000 mark. It's projected over the next 6 months to that $5,885 an ounce. That's a 47% gain from where we are right now. So the fact that gold's down, this represents, in my opinion, an excellent opportunity to buy the dip. Silver also shows a dramatic increase in the tools I follow, even more so, an increase projected of over 66%, from around the 46.5 mark we are now to somewhere around $77 an ounce. Again, buy the dip. These are great opportunities if you believe in these tools and these forecasts, from the investment banks to the technical tools we follow to the YouTube experts that are out there. This, to me, represents a great opportunity to be a buyer in this market. All right, so we've got a near-term outlook that we have to pay attention to. Like I mentioned, for over the next week, we're likely to see some gyrations in the market, maybe even a little more down before we start to see a turn and head back up. But the 90-day and the 6-month forecast looks very, very positive from where I'm sitting. So let's watch the technical levels, these 4,000 for gold, the 4,200 resistance, the 50 for silver we talked about, whether it'll get there, break through, and continue up. These are the areas we need to stay focused. I want to thank you very much for being with us this week. Please, when you think of buying or selling, we're here for you at Summit Metals. We see our relationship with you as that of a long-term partnership, and we look forward to serving you in the future. Happy stacking, and we'll see you next week.